Hi, and welcome to this week's Market Insights, where we break down the key events set to drive the markets between 30th of June and the 4th of July. With inflation trends, labour market data, PMI releases, and a high-profile central banking forum all in play, we should brace for a potentially volatile week. Let's dive in to what's moving the markets. Now, we begin in the Eurozone, where June's year-on-year inflation report flash will be released on the 1st of July at 12 p.m. GMT plus 3. May's annual inflation came in at 1.9%, down from April's 2.2%, and dipped below the ECB's 2% target for the first time since September 2024. The decline was largely due to a sharp drop in services inflation, while energy prices continued to fall and non-energy industrial goods inflation held steady. Importantly, core inflation, which strips out energy and food, eased to 2.3% year-on-year, its lowest level since January 2022. This cooling inflation convinced the European Central Bank to cut its deposit rate to 2% in June. Markets now expect the June flash reading to remain around 1.9%, keeping attention on core inflation and, of course, geopolitical risks that could disrupt the disinflationary trend. The latest flash inflation data caused some volatility and briefly supported the euro as it aligned with market expectations. A deviation in the upcoming release could once again trigger market moves, especially ahead of the ECB's next meeting on the 24th of July. Okay, next up, and we shift to the US. The June non-farm payrolls and unemployment rate will be released on the 3rd of July at 3:30 p.m. GMT plus 3. In May, the US economy added 139,000 jobs, slightly above the consensus. This followed downward revisions for March and April. The unemployment rate remains steady at 4.2% for the third straight month, suggesting a tightening labour market, even amid slower job creation, possibly due to reduced immigration. This steady jobless rate gave the Fed some breathing room. However, President Trump has been vocal, pushing for more aggressive rate cuts. While May's data barely beat expectations, it still gave the US dollar a boost. If June's figures are stronger than forecast, or if unemployment ticks lower, the greenback could gain further ground. Next up is the US ISM manufacturing and services PMIs, due out the 1st of July and the 3rd of July at 5 p.m. GMT plus 3 respectively. Now in May, the ISM manufacturing PMI fell to 48.5, missing expectations and marking the third straight month of contraction. This was the sharpest decline since November 2024, reflecting persistent economic uncertainty and cost pressures, exacerbated by volatile trade policies under the Trump administration. Meanwhile, the ISM services PMI dropped to 49.9, also below forecasts and signaling a modest contraction, the first contraction since June of last year. This was attributed to mounting concerns over tariffs and global trade conditions. Price gauges across both sectors remain high, suggesting inflation pressures are far from gone. Traders will be watching closely for any sign of stabilisation, especially in new orders, prices paid, and employment metrics. These are going to be quite key figures in terms of the general health, so keep your eyes open and your ears to the ground. Now, also this week, we have the ECB Forum on Central Banking running the 30th of June to the 2nd of July. This annual gathering draws top central bankers, including Jerome Powell, Christine Lagarde and Andrew Bailey, making it a critical event for market participants. With discussions likely centred on inflation, rate paths and soft landing prospects, any shift in tone from these meetings could well influence markets. So it's going to be really important to listen to what is said, but also how it's said. Now, don't forget, US markets will be closed on Friday the 4th of July in observance of Independence Day and will close early on Thursday the 3rd of July. So do expect some lower liquidity and reduced trading volume starting late Thursday, which could amplify volatility. With the June jobs report landing just before the holiday on the 3rd of July, price action may be sharp as traders react in thinner conditions and square positions ahead of the long weekend. Well, that's it for this week. With key economic data, central bank commentary, holiday-driven liquidity shifts ahead, volatility is likely. So don't forget your risk management techniques and be sure to follow FX Open's news analysis section for real-time updates. Thanks for watching, and as always, good luck with your trading in the week ahead. Bye for now.